Where are the like screaming deals?
You would think the smaller spaces are where the screaming deals are, and the short answer is it's not.
Should we be shopping for new space right now? Now, if you're growing and if you're going to grow in 26, secure it now or wait?
Prices are going up from Q1 to Q2, from Q2 to Q3, from Q3 to Q4. Landlords are getting more confident by the day. The general public press about San Francisco is improving. As these landlords continue to grow more confident, as these sub-landlords continue to grow more confident, they're going to hold closer and closer to their rates, and rates are going to continue to go up.
So what are the options? How do people find space? How can founders like start looking?
So...
Well, all right, Reuben, welcome. Thank you so much for joining us again, round two.
It's a pleasure to be back on with you, David.
Awesome, man. So, dude, so you're on ground zero in SF commercial real estate. Like, what's going on? What's the latest? What's the latest and greatest?
Yeah, those in my position will tell you it's a very exciting time to be in brokerage, especially those of us who crossed the chasm of the pandemic and come out of it still operating. The stats are finally starting to follow what those of us on the ground have been seeing for the past 12 months. I think if you look on Twitter or LinkedIn, you'll see that the return to office RTO momentum has been strong for a while. Companies are hiring in SF. People are excited to be in SF. Mayor Lurie has done us all a really big solid. Kudos to his PR team, but I think he has led the charge in driving excitement back to being in San Francisco. The average asking rent has finally stopped decreasing after 5 years and is now back up on the rise. That being said, it's at $68. I think it's $68.73. At its peak before the pandemic, I think it was in Q1 of 20, it was $88 a foot. So we're still at a 25% discount from where we were.
Yep.
The vacancy numbers, similarly, have been rising for 5 years straight. Prior to COVID, they were at 3%. At their peak, they were at 38 or 39%. Now they're back down to 35%.
Mm-hmm.
So still a lot of vacancy, a lot of opportunities out there, but those opportunities that are creative, that are plug and play, where you can walk in and start working immediately, and that offer a short term, call it 1 to 2 years, are going off the shelf quickly. Typically, when you get to them, they'll have a proposal or two on them, and you'll need to offer either the asking rate or even a little bit above it just to be competitive.
Yeah, because we've been through that together. I mean, and we always were searching for a good deal, and we kind of got, we got rejected a bunch. So you can't really go too low.
Exactly.
Yeah.
And it's also a location thing. So what happened was, as these companies started to come back, first it was Jackson Square that got hot. Ripple took 600 Battery. A bunch of the VCs went up and took space in the heart of Jackson Square. Bain Capital took really cool space. Canva took a beautiful space. Then it started to go more into FiDi and South FiDi, and Facebook sublease over at 181 Fremont started to go. Strava took a bunch of space there. Navan took a bunch of space there. Both those tenants, to my understanding, are continuing to grow. There's a bunch of other tenants looking at it. Now it's starting to move into Soma because that's where the best deals are. So in the last quarter alone, you had Harvey take 92,000 square feet at 201 3rd, a beautiful Class A building that used to rent in the 80s and now is significantly lower than that. They were able to take advantage of a great opportunity. Brex just took 98,000 square feet at 275 Brannan after being one of the first companies to go remote, which was a big indicator of kind of where the general sentiment is. Our client Zip took 70,000 square feet at 680 Folsom, and they were able to take advantage of a great sublease opportunity or some sublease opportunity. And so these AI companies are really trying to get creative where they can grow, maintain their flexibility, take space that is plug and play, and still take advantage of COVID rates.
Yeah.
I think the problem is that those opportunities are starting to dwindle. And so those who are kind of hopping on them quick and even being less cautious than before and taking longer terms are the ones who will probably benefit in the long run.
Yeah. And what is like the sweet spot right now? Is there a sweet spot of like, where are the like screaming deals?
So it's funny. You would think the smaller spaces are where the screaming deals are. And the short answer is it's not. Most of the tenants who are looking for space are in, call it that, like 2,000 square feet to 10,000 square foot range. It's those seed Series A companies growing out of their initial space and adding headcount here in San Francisco. And there are cool spaces, but those are getting snatched up quicker than all the others. Once you get to that 10 to 20,000 square foot range, that's when there start to be more opportunities than there are demand. And that's when you can really start to negotiate.
Oh, interesting.
deals
10 to 20,000. So how many people is that usually?
Somewhere between 70 and 170.
Wow. Okay. Interesting.
And it used to be, as you grew even bigger, and call it 50,000, 100,000 square feet, that there were significantly more opportunities than there are tenants. And that is still the case, but it is starting to turn very quickly because a lot of these AI companies who took 20,000 square feet last year are now back in the market for 100, 200. And I'm sure you can think of some of those names that are very popular.
And are those folks all like trying to sublease their, like, do they all sign 3 to 5 year deals and now they're like going to have to sublease? Like, is this just, the problem kind of keeps going?
Yep. So the answer is yes and no. I would say in this last cycle, landlords were significantly more amenable to doing shorter term deals. And a lot of those tenants did shorter term deals because they had the leverage, right? The market wasn't quite back yet. These tenants were the only ones in, a sea of vacancy looking for space, and these landlords had to reach to get them. So they would accommodate 1-year terms, 2-year terms. And these tenants only wanted those short-term deals because they were just starting to come back to the office. They weren't exactly sure how they were going to operate going forward. They wanted to see if their employees would come to the office. I remember the word mandate was like taboo 2 years ago. And now if you're in the job market and you're getting hired for a job at an AI company, more than likely you're going to have to go to the office at least 3 times a week.
Yeah.
And sometimes 4 and sometimes even 5, although we're still not seeing that fully.
Yeah. Interesting. And, so, I mean, obviously all neighborhoods are different. We're here in Union Square. Like, there's commercial, startup space, and then there's commercial retail space. Are there opportunities in the retail space to turn it into startup space? Like, what does that look like? Because they seem like pretty desperate. A lot of really nice buildings are signs everywhere for lease. So, what's going on there?
It becomes a harder conversation when you want to convert retail space specifically to office space. You need to get what's called a change of use because you have to abide by the zoning laws that are out there. Union Square is a really interesting story right now. There's a landlord who's a descendant of the Reichman Group who owns a lot of real estate in London that is gobbling up buildings in Union Square, like right along Powell Street, because they're sensing opportunity and believe that Union Square is kind of the future. And there have been a few operators recently that have opened in Union Square and kind of brought some life into it. I'm not sure if you saw Nintendo opened up a shop.
Did you see that? Nice.
Yeah, Pop Mart opened up a location.
I heard about this. The Labubus are in Union Square.
And there are a few other, very exciting operators that are set to open in the next couple months. And so folks in the retail space, I'm not one of them, believe that retail is really on the rise. I do too. I just don't know as much as my retail friends who really do this in and out. I'm more of an office and industrial guy. But regardless, it's brought excitement to the area. And Union Square, similar to Soma, is one of those markets that really got hit hard by COVID, and office opportunities are still abundant and cheap. And so those AI companies right now who are looking for the deals, which is many of them because they think similar to you, they want to stay lean, both in cost and even in headcount, which is now a newer thing that didn't happen in the last cycle. Thank you to AI, are able to keep their costs low, take space on the cheap, and even keep terms low in these two markets. Whereas if they were going to a Class A high-rise building in FIDI, those landlords are getting a little more confident and they're going to require minimum 3-year term and usually more.
Yeah. And like, what's going on with the owners? I remember, people were talking about, basically buildings are valued on rent roll multiples, right?
Right.
And so there was an incentive for owners to not rent space at these new discounted pricings because it'll decrease the value of their building. They have that impacts their loan in some way. Can you talk about how that all works? And then what are owners doing? Is now a good time to
to buy real estate,
in downtown San Francisco? What's the deal with the owners?
The short answer is if you can afford it, it's a great time. What's happened over the last couple of years is you nailed it. Landlords had been strict on keeping their face rates high to maintain the valuations of their buildings. Unfortunately, several of them weren't able to continue paying their loans as the vacancy continued, and they weren't getting that rent roll to pay it back. And so several have either gone back to the lender and been forced to sell, or those owners have been forced to sell at steeply discounted rates. I'm not sure if you saw 1019 Market just hit the market this past weekend or maybe a week ago at an 80% discount to what it previously sold.
Wow. And what's the price for that one?
I think it's like, don't quote me on this, maybe 15 million. I'll go back and look.
Oh, 1019
previously
Market.
it sold at like 80.
Wait. Okay. Wow. So 1019 Market, where is that?
It's like 7th and Market.
7th and Market. So
that neighborhood's been hit much harder.
So that's near like
Near
the theater, Civic Center,
Correct.
which Lurie like cleaned up.
He cleaned up, but
He turned it into a skate park, which apparently, made it a more safe area.
Totally. And it's been slower to recover from
Yeah.
COVID. There's a lot of office products. Some of it did get leased. The city of San Francisco actually did an enormous lease this year, right around there. I think it's on 8th Market or 9th and Market. But so a lot of these buildings are finally starting to sell, and these new landlords are purchasing them at steeply discounted rates, and they are the ones who are able to offer lower rents. There's one very interesting landlord, Roger Fields, Peninsula Land, and they acquired 550 California, a building that had been occupied by Wells Fargo for like 20 years, completely vacant, old office product. They knocked down most of it, are rebuilding it, kind of turning it into smaller suites on each floor, making them creative and offering steeply discounted rates to every other Class A building around. And I think now in under a year, they're 90% leased.
Wow. And what did that trade for?
Building. I have to check these.
Because that was also a big, I remember, is that the Pursuit of Happiness building that Will Smith works at on California, right? You said 550. That's 350.
That might be 350.
Okay, but
I'll
close
check
to
and confirm
it.
that. I'll check and confirm that because both of those buildings sold in the last year, both at discounted rates. And 350 Cal was also able to lower their rents, but not as low as 550. And at least
okay.
And he just bought another building this past week for over $100 million. 505 Montgomery.
505 Montgomery.
In the last quarter alone, I think there's 11 buildings sold for its 2.4 million square feet of office space, which is the highest selling quarter since Q3 2019. So in that space, kind of the floodgates have finally opened, and folks are starting to sell, and there's a lot of cash that's been sitting on the sidelines that is now coming into play.
And so these new owners don't have that rent roll valuation problem, right?
They have a lower basis.
So they have a lower basis. They're willing to sell for lease for less. Interesting. And they're long-term holders now, so they're not really worried about the valuation.
Well, they're not all long-term holders.
Okay.
What a lot of them are doing is, and this is such a classic play, is you buy an office building at a certain rate. Hopefully it's discounted. You put some money into improving the lobby, the amenities. You're going to see various landlords are building new amenity centers. There's a great example at 525 Market. They built this beautiful amenity center called The Cove, which I highly recommend checking out. It's stunning. And they're being able to use that to increase their rents going forward. So it's a long-term play to get higher rents for filling up their vacancies. But then once those vacancies get filled, it's very common for these landlords to then turn around and put that space back on the market.
Got it.
Almost like flipping a house.
Yeah.
You buy a house, you improve it, you flip it. Not all the time will do that. Several of them are long-term holders, especially a lot of older San Francisco families that buy real estate. But regardless, this is something that landlords haven't had to do in San Francisco in, the last 40, 50 years. They're pretty spoiled here. They typically always have their buildings full. They sell based on location. There's always been more demand than supply because we're a small market. But, now it seems that the tides have turned and hopefully it's going to be great for tenants going forward.
Nice. Wow. So, okay, we'll look at 1019. That's an interesting, that's crazy that people can buy these buildings at such crazy discounts.
Yeah. And if you remember last time we were searching, we were considering space in Lower Soma.
Yeah.
And that area still has not rebounded. If you want the cheapest deals, that's probably where you're going to go.
Lower Soma. So what streets are that?
Below 5th.
Below 5th. And okay.
5th to 10th, let's
5th
call it.
to 10th.
I think we're looking at on 9th Street.
Yeah, we're right across from
Our crews used to
Sightglass. Yeah. There's a startup in there now.
Yeah.
Yeah. I mean, there's so many interesting things that can be done in these spaces, you know, like, I mean, I think WeFunder is such an awesome space. And shout out, WeFunder.
Yeah.
They got a really awesome space, and in the mission that they like converted into this like beautiful event space, like 4 floors, like crazy.
Yeah. And they host events. They've hosted hackathons.
Yeah.
I've been to so many cool events there, and they're just such wonderful people.
Yeah.
You know, I think they set a really, really cool example of what you can do with a building that's not that beautiful and quickly made it beautiful.
Yeah. Yeah. Awesome, man. And I also saw you got some other stuff going on with Hoops. So what's this LA? So tell us about Hoops, because you're also the founder of a sports league.
Correct.
Company. You know, you do golf, you do basketball for tech, people in tech, founders, VCs.
Yep.
How's that going? What's the latest and greatest there?
So it's going great. SF Hoops signups actually come out on Saturday for the folks who have joined in the past. So stay tuned. And then on Monday for, you know, the general public. Both the basketball league and the golf league were really just passion projects to start. I think, you know, I was relatively new to San Francisco and wanted to meet people in tech. We quickly realized that there was a ton of demand for this, and it just ended up being so much more fun than we all expected. And everyone who joined quickly became friends, and, you know, started to hang out outside of Hoops and started to play in basketball runs outside of the league. You know, we then tried to spice it up a little bit. We do weekly highlight tapes, weekly recaps. We got sponsors. Shout out to Fondo and Codium and Windsurf and Arc. They're all amazing. And, you know, it kind of just blew up. You know, now every time we release signups, it fills up in 48 hours. And, you know, I think it's something that I'm going to want to do for the rest of my life, because it is kind of a place where, you know, everyone's on equal footing. You know, it doesn't matter what you do outside of this basketball court. You're here to play. It's here to kind of be your area of peace, to separate you from everything you're having to deal with outside of it.
Yeah.
And yet still you're able to accomplish the networking that you would in going to a happy hour or a work event or, you know, a hackathon or the like.
Yeah.
And so I've been very proud to be able to foster a place where folks can kind of get away from all that. And then it just so happened that a lot of them started asking for help with their office space needs. And, you know, I feel very, very, very lucky to be part of it.
Yeah.
And so for the LA event, we want to do something cool during Tech Week. Originally, we were considering SF versus LA. We connected with these 2 awesome VCs in LA, Tyler Ganem and Christian Juzang. Were both great. And we decided to plan a little SF versus LA VC Hoops game. And we were able to lock in the Intuit Dome, where the Clippers play, which is really cool. It's going to be on October 14th. The SF team's already almost full. The LA team is already full.
Who we got on SF? Who's repping SF?
We've got players from Duolingo. We've got some sports VCs in it. We've got players from Felicis.
Okay, let's go. Of course.
I still got a couple spots open. We have an awesome landlord from here in San Francisco who's going to represent the city. So
I love it, man. I will not ask for a spot because I suck at basketball, but I love the league. I love the league. But if anyone's listening, hit up Reuben to secure your spot.
Thank you.
Send him some footage though first.
Spots are running out. And if you work in sports and just want to attend, it's going to be a really cool networking opportunity at a beautiful place. So
yeah. Wow. So, okay. So, are you guys going to fill up the dome?
We'll see. So far, we're only allowing 100 spots.
Okay.
For folks to come in and watch, just because we don't want it to be completely overflowed. And, you know, we find that these closer knit groups with less people are able to connect on a higher level. I think that's why I limit the basketball league to 80.
Yeah.
That way we get to know everybody who plays. So we'll see. You know, we haven't even released invites or signups for that yet. It's actually going to happen in the next week or 2. But as we're doing it, if we need to create a little more room, we certainly will.
All right. I love it. I love it.
Testing it out. We're going to see how it works. And hopefully it's something that we can bring to SF. I'd love to play at Chase on my home turf.
I mean, let's do it. Let's make it happen. We got to hit up Myra at JP Morgan and see if she can help us out there.
Myra, if you hear us.
Yeah, it's a fun league. Let's talk about the finance stack for SF Hoops. So what does that look like?
So as folks are signing up, they sign up via Stripe. Then I use my easy to navigate and use platform in Arc, which I think is significantly more user-friendly than your traditional banks. And then when it comes tax time, all I need to do is go to Fondo, because I can just go straight on their platform, see everything I need to do. And then whenever I have a question, I can immediately call a CPA. Everyone's extremely accessible. I get answers within a day, and I don't have to think about it.
Very cool. So what's next? What do you think the rest of Q3, the rest of the year looks like? Like, should we be shopping for new space right now, or wait? Like, is this a wait and see, or like jump on something now? If you're growing and if you're going to grow in 26, secure it now or wait?
Secure it now.
Yeah.
Prices are going up from Q1 to Q2, from Q2 to Q3, from Q3 to Q4. Landlords are getting more confident by the day. The general public press about San Francisco is improving. As these landlords continue to grow more confident, as these sub-landlords continue to grow more confident, they're going to hold closer and closer to their rates, and rates are going to continue to go up. Unless we see another pandemic or some unforeseen, act of the world that changes the trajectory of what's going on right now, if you're going to need new space next year, now is the time to start looking. And you still have the flexibility at this point, especially if a space isn't coming available for a few months, to delay your commencement to a period where you're not paying double rent, or you can start preparing to sublease your space now. That's something we're doing in a few scenarios. We're searching for tenants who are doubling in size as of Jan 1 or Feb 1, who are currently locked into leases for another year or two, and simultaneously marketing their space for sublease so that they can work in a situation where they're not paying double rent and they're getting new keys as they're handing the old ones off.
Yeah. Wow. So what are the options? How do people find space? How can founders start looking? So
if you want to do a cursory search by yourself, you can go onto the LoopNets of the world, and it'll give you an idea of what's out there. A lot of that is inaccurate. You have to call and confirm and gather details of when it's coming available, what the asking rate is there room on it, are there other proposals on it, what's the current condition of the premises, is it furnished, does it need improvements, etc. But if you want to spend your time doing your job, I would outsource to a real estate broker, whether it's myself or many of my peers and competitors who are all really good and keep us all on our toes and hustling to be our best. Because we do this on the daily, and we have our foot right on the pedal of where the market's headed. Most of these properties we're touring on the daily. We know who's looking at it, when it's coming available, what else is coming available that's not currently being marketed. That's getting more and more important by the day as these, nice spaces are being competed for. And the landlord is the one covering the fee. So when you're a tenant hiring a tenant broker, you are not responsible for paying that fee. It is the landlord who is responsible. I think some people say it's free. It's not quite free. The fee does come out of your rent on the day-to-day, but that fee that exists will still go to the landlord broker if you go by yourself. And if you go by yourself, you have no basis on what other tenants in the building are paying, what the general market rate is, what kind of discounting room you have, what is the general market standard for how you negotiate these deals, free rent, tenant improvements, termination options, renewal options, extending the commencement date, early access. I think these are all kind of things that you need a little nuance and a bunch of experience to grasp, and they're even constantly changing. The expectations you have for free rent now are not the expectations you had for free rent 2 years ago. Mm-hmm. Even from when we took this space initially, Industrious has gotten significantly more packed, and it's been a little bit tougher to negotiate. So every situation is a little bit different, but especially for a line item on your budget that is as big as real estate, I would always recommend that you bring in someone, bring in a professional.
Mm-hmm. And so what are, as we close out here, if we're thinking about pricing at each segment of space that someone needs, so like a 10-person company, what would be a range that you should expect for a 10-person company, then probably a 25, and then a 50-person? For those three segments, what do you think is a good rule of thumb as people are looking around right now?
For a 10-person company, I'd say anywhere on the cheaper side, $4,000 to $6,000 a month. On the higher side for nice space, 10 to 13 grand a month. That's if you want quality space. And remember, this is all subject to how much term you negotiate. If you need any improvements, remember, it's all quite variable. So don't take these numbers as fact. 25-person office, somewhere in the 13 to 15K a month on the lower side. On the higher side, probably 22 to 28 grand a month. Once you get up to 50, call it on the cheaper side, and it gets a little bit more variable because you're dealing with bigger space and lower asking rates. Call it on the lower side, 30 to 35K a month. The higher side, 50 to 60K a month. But remember, even that can be variable on what neighborhood you go to, when you need the space, how much term you take. My recommendation, and what I'm telling a lot of my clients right now, is if you can be a little more flexible in geography and time. So if you're getting out there a little earlier, it is really, really helpful if you can wait to find a sub-landlord who is desperate, who has some level of desperation to get out of their premises. Either the space has been on the market for a while, the term is, shorter and sinking quickly. We call that a melting ice cube situation. If there's 12 or less months remaining on your lease term, every month that goes by, you are less likely to be able to sublease that space because the tenant's not going to want to come and take it for 8 months, then 7 months, and then 6 months.
Yeah.
And then the lease will come up and they'll have to negotiate a direct deal at a significantly higher rate. Or they're moving to a new space and really don't want to pay double rent and just need to get out of their obligation. You can then take advantage of those situations and get a really great deal.
Yep.
And always when you're on a search, it would be ideal if you have at least 2 options that are legitimate that you can chase after and leverage one against the other. Because you never know, one, you never know what will happen. Another tenant can come in tomorrow and propose a higher rate right as you're about to agree to terms, and it's something you can control. And 2, several of these landlords have room on their asking rates. And the longer time you have to negotiate and the more they know that you are actually considering other options, the better you'll do in the end.
So where can we find you? Where can we find you, Reuben?
So you can find me on traditional channels, Twitter, LinkedIn, Instagram. You type in my name on Google, you'll find my CBRE bio with my email, which is on all our platforms. In the real estate world, folks tend to be a little more antiquated and use email, but I'm always just a text or a call away for all my clients, my prospects, my friends, my family.
What's your email address?
It is Reuben.Torenberg@CBRE.com.
And your Twitter handle and LinkedIn?
@rtorenberg, @rtorenberg021. But if you just type my name in either one, you'll find it.
Okay. All right, let's go. All right. Thanks again, Reuben.
All right, man. My pleasure.